Love the engagement in the audience. So I'm going to give you a challenge then, since you're so talkative right now. We're going to talk about what new surprises in the world economy. So before I even invite the panel up, what new surprises are any of you seeing and expecting, since you're in this talkative mood? Do we have microphones? All right, we're going to have to invite our panel to hear what they're saying then. Please join me on stage then. Annika, Winsth, Chief Economist, Nordea, Günther, Mårder, CEO of Företagarna, Katrine, reporter Dagens Nyheter, and Kostyál, Head of European Listings at Nasdaq. Warm welcome to you. Thank you for being here.
Thank you.
And let's see if we can get the audience also thinking about some of these tough topics we're going through. There's so many things we could talk about here, but I feel like we almost need to start on a topic that I think actually everybody are thinking of. Sometimes I feel like I'm following the meeting schedule of the central bank more than I'm doing the World Cup actually this year, for the first time ever maybe. So let's start on the central banks, this drastic shift we've seen from something which was maybe quite passive and keeping the flow of cheap money to being a very drastic shift to short periods of rapid rate hikes, also quite aggressive communication compared to what we've seen before. Günther, if we start with you, what is it we're seeing? Is this really necessary? Can we even foresee the consequences of what's been happening the last few months for us?
Yeah, probably this is necessary due to the former monetary policy. We have had a decade with minus rates, which I think has served us not too well, because it has driven up asset prices and created new unbalances in the economy. And the economy is about expectations, our behavior will be changed when we see that expectation is changed. Right now we are seeing a big shift in expectation for the future, and if I look to the household, you can see that the buying power now is shrinking faster than I've ever seen. You have to go back to the early 90s to see the same numbers. And I think that in half a year from now, we will look back on this period and say it went a little bit rapidly. And the consequences will probably be quite big, especially for the small and mid-sized companies I represent. Many of those, they have the household as their prime prime customers. So therefore, we will see an increased number of small business owners having great problems the upcoming months. And you could see the default levels raising up to top levels for at least 20 years. So I think the last month was the second highest number of defaults in small businesses that we have seen in 20 years. So and it has only started.
But from a low level.
Yeah, from a very low level, but it is the second highest number since the last 20 years.
But you think it has only just started, and you think it can...
Of course, we have only seen the beginning, because of the buying power of the households will, of course, for the upcoming month be weaker and weaker. They had a lot of savings during the last 10 years due to the minus rates and increasing asset prices. They have a large amount of money right now, but it went away when buying power getting lower and lower.
But if you were heading the central bank, you would have done approximately the same what's being done?
I wouldn't do the minus rate at all from the beginning. And I actually looked at an article where me and Annika was in Dagens Industry reflecting about this issue when the minus rate started. And we saw a lot of risks that we identified already.
Which year was this?
2015.
Okay.
So, and we said that there would be a lot of unbalances in the economy, and that's what we see right now. So, yeah.
And Annika, would you have done these rate hikes this quickly?
I think it's too much and too fast. but I think they need to act as we have such a high inflation. But my personal view is that I think the central bankers are responsible for the big swings, and that's exactly what they are supposed to avoid. And the most important task for them is to stabilize economies, and they have done exactly the other way around.
The opposite.
Yeah, and that's problematic because that's a risk that we will end up what you described, but also problem for households. There was a question about electricity prices here, and lots of people feeling it already now. And the central bankers, they have used the inflation target as an argument in many years, from 2015 actually, to have very loose monetary policy. And we have really strong growth in 17, 18, 19, and 2021. Lots of economies overheated, but they still continue with crisis policies. And then suddenly, they just turn around, and then when people had high debt level and companies have high debt level, they turn around in 180 degrees and started to hike rates very, very fast. And of course, it's tricky for those people with high debt level to act in that direction so fast, and that is a risk that we will end up with problem. And I think also there is a risk that central bankers will not recognize how big impact they have on the demand. And there is a risk that we will end up not just in a downturn, but also in a recession, and even worse, in a crisis if they don't stop. And then a positive angel. I hope you listened to Powell yesterday, the central bank, Federal Reserve, and he said that maybe they can start to take smaller steps, and that's exactly what I want to hear now. And I also wish that we will have a little bit weaker growth numbers, because that's also an indicator that they can calm down. And hopefully others will follow Fed and Powell.
Katrine, you look like you're going to say something.
I'm just trying to understand the argument. I mean, but wasn't the problem that the Fed started raising too late after the pandemic?
Too loose monetary policy too long, and then they were late on the ball, and then now they are in hurry, and now it's too much.
Yeah, so it's quite complex.
Really complex.
So you're saying it's complex, but you're saying that loose monetary policy as such was a mistake.
It was, definitely.
So two different views.
Yeah.
No, I'm not sure. No, I'm not
Let's figure this out.
I just want to know what people think.
If you take Sweden as an example, we have very low rates from 2015, but the growth started to increase. So you have rates, and then you have a growth coming up like this. Normally, those lines should be together. Higher growth, higher rates, lower growth, lower rates. So you have had problem. I write my first debate article 2015, one another 16, 17, 18. Not 20 because we have the pandemic, but now we have a lot of discussion about it. So it's a problem during many, many years.
Yeah. But what I do agree with is how dangerous the situation is. Just thinking of a really, really sharp downturn that can be blamed on the central banks, and the political consequences of that is quite scary, I find.
Yeah, and we don't vote for them.
No.
We vote for politicians, so they have responsible for what they can do. But now we can hear the politicians say, for example, the Minister of Finance in Sweden, I can't do anything because we have such a high inflation. And you know what happened with Truss? She also tried to use a fiscal policy, and she have to leave.
Interesting times, but I think I always enjoy listening to Annika and Günther. Of course, you as well. But I think from our perspective, from a market perspective, I think it's, you mentioned expectation, it's the management of expectations. Because I think at the end of the day, the market doesn't know what's ahead of them. And I think from that perspective, we're facing a struggle where we have been pricing a lot of the low rates, which has driven valuations on growth company and growth. And I think we're experiencing the fact that the risk appetite is going down dramatically. And we want expectations to be leveled and to be managed. I think we have to come down to a level that we're not used to, in the sense that we've been quite spoiled for a long time with cheap money and high valuations. But I don't think the market is waiting for those times to come back. I think the market is waiting for the market to stabilize. And that level will be lower. And then the market will come back again.
When do you think that will happen?
Well, I think view is that I think we're seeing the light in the tunnel, and I think it will be, it's like climbing a wall. It will be a bumpy ride up. There will be, it will be a gradual, pretty unstable way up, but it's on its way up. And I think we're starting to see that with, what the Fed said now the other day. We're seeing, that Europe maybe will sustain this geopolitical situation with the energy better than they had expected. We're seeing slightly lower inflation in EU. We're seeing still quite good results with companies, etc. I think we see a lot of good signs, and there's a lot of capital that wants to be deployed, and they can't wait forever. But valuations will be lower, but capital will be deployed, and I think the markets will start coming back. But big, lofty valuations, that will take time. And I think it will take time in my world where we do IPOs and list companies, it will take time before we start seeing dramatic, big IPOs with high valuations. I think investors will be looking for management of expectations in terms of when will they start making money. It's not only about growth. So it's a balance of different things.
But do you feel like we've been at the bottom? You feel like
I think I think there's tough times ahead, uncertain times ahead, but I think we're on the way up. That's my perception, and I think that's where I hope we're going.
Annika?
I think we need to know the price of money. And who decides that? Fed. And when are they ready? I guess most people in the market believe in first or second quarter next year. So when they say, now we have hiked enough, then you know the price of money, and then you can start to do business again. And then we will see the turnaround.
Absolutely. And I think in our forecast, we're predicting, more activity Q3, Q4 next year.
Next year. So that's
and I think, will we know the price of money by then? We will have a better view on things. And I think overall, if you look at growth companies that have been predicting, high valuations based on future revenue, that is something that you don't get paid for anymore in this high inflationary environment or higher inflationary environment. And we have to start seeing that inflationary environment stabilize, and then you will see valuations come back.
Again. Before we move on, any reflections, thoughts, questions in here? Yes, we have one here. Could you say your name? Repeat. I know you've said your name before, but just in case.
Vegard from Distribute.
Yeah.
Why do you think we're seeing now this disparity between the central banks and politicians? I mean, we're seeing it in several different places. Why, and why now?
I'm sure Annika has a view.
I'm surprised that the politicians haven't said no before. Because the central banks have taken power we didn't know that they should have. And nobody has said no, because we have been in good times. And I think that's the reason. And everything is fine, and people do a lot of money, then nobody says, oh, stop, please, I don't like this. There is a bubble ahead of us. And now we are there. And now it's suddenly too late. But I think it's very important that the politicians take back power from the central bankers. Of course, we should have central bankers that have a target and so on, but we don't want to have central bank who buy in corporate bonds equities, for example, as Bank of Japan do.
And I think we've also been in a period with sort of weak coalition governments in a lot of countries, right?
That's true.
Which I think probably has mattered as well.
Yeah. And nobody wants to be the party pooper, so.
No.
Yeah. It's a good momentum. Thank you. Is there another one?
Gabriel Melchus with Dagens Industri. Katrine, you pointed on something very interesting, the trust in central bankings today. I want to hear your thoughts on it.
Yes.
In Sweden, the way we set salaries is depending on us trusting in the capability of controlling inflation. And if that trust is eroded, things could potentially get very nasty.
Yeah, no, I think that's, I mean, I don't have the answer, but I do think that's interesting. Somebody I interviewed said to me a few weeks ago that, the problem, it was somebody from the political side saying that the main problem with inflation is that it erodes political capital. Yeah. So it's more that almost than an economic problem. And I do think that's an interesting perspective on it. And I mean, we already see sort of articles about targeting and, and what to do. And I do think that space can start moving quite quickly if things were to sort of really go down. And I also think with the US that, yes, obviously inflation, it will look like it eases significantly over the next few months, but sort of the underlying, problem is still there, and do people realize that it's probably never going to go back to the way it has been, and for a whole generation that's all they can remember.
I think there's another angle on this, just which I think is a bit more concerning from an EU perspective, is that US will potentially come out of this much stronger and much quicker than the EU will. And I think that if you look at what that dynamics that creates, is that a lot of the innovation and a lot of the financing of innovation will gravitate towards the US again, a bit like we saw, in year 2000 for many years, where after year 2000, Europe slowed down. And I think that's the concern that I have, at least from a perspective of, this unbalance again, that the US will come out strong. We need a strong US, of course, but I think the EU has to stay on board and stay focused and stay aligned with the growth that we're going to see with the US coming out strong. At least that's my view.
Yeah. And a lot of that depends on how long the war goes on for as well.
They're not as impacted by the war. I mean, the war is important for them, but we're living it. They're not. They have a different energy situation that we have. They have a different interest rate situation that we have. So I think from that perspective, they will have a tough time as well. They are having a tough time. But overall, I think, and I think we're still struggling here with Brexit. We're still trying to figure out what EU is doing. And EU is doing fantastic things, aligning with Europe, aligning with the energy issue. But they have more momentum potentially if they can get their act together.
Perspective. Looks like you want to comment.
Yeah,
Annika.
if I go back to Gabriel's question, I think that at least the central bank in Sweden underestimated parts, and I think they're really responsible. And the union knows that if they are asking for too much, they will lose jobs, especially when we have this downturn ahead of us. So I'm not that worried, and I think they should find trust in that as well.
And how do you create trust? You say what you expect to do, and then you should do something like that, almost. And if we look at central banks and Riksbanken, for example, you could see that their expectations of future decisions have been totally wrong for, the last
2008.
And even more, I would say 2 decades at least. So there is a lack of trust due to the future expectation of central banks' decisions.
So how do you feel about the Nobel Prize to Ben Bernanke?
Yeah, we could discuss that one.
Not fantastic.
My piece of advice would be look at the market instead of the expectation from central banks. Market is more often right.
Than the Nobel Committee.
I didn't say so, but
Actually, Bernanke will have the prize, the Riksbanks.
Yeah, that's what I mean.
Which is interesting choice.
Yes, and he is the guy who started those exploding balance sheets.
That's what I mean. Yeah.
Yeah, very entangled issue. It's super interesting. I'm thinking of following up on where you went, Adam, with the access to capital and people starting to invest again, and connecting it to the conversation we had before on climate and sustainability and how extremely important it is. Even more so maybe when we talk about the COP meeting being a cop-out, I think Nick said, that investments keep going into this green transformation and even accelerate given the different crises we have. Will this be affected is there a risk that the green transformation investment will be negatively affected?
I'll try to be the optimist then, and I think at the end of the day, I don't think the customers or the industry is waiting for politicians to take action. I think a lot of that dynamic, we heard that earlier today. We heard it from Scania and many other companies today presented that they're driving this, not only because they feel it's the right thing, it's also what their customers want. And if they don't do it, they won't be the right provider to their customers. They will lose out. So they're future-proofing their business by being aligned with adopting a more climate-oriented strategy. So from my perspective, I'm optimistic on that. I think the other aspect is, from a public market perspective, I think a lot of this financing will need to take place through the public markets. A lot of the financing is now taking place outside the public markets, which is interesting. If you look in Germany last year, they listed 24 companies, in Sweden 200. Many of these 200 companies are innovative, climate-oriented companies that are driving innovation. I think a lot of the innovation will come from smaller, medium-sized companies. We need to finance them. And it's not a selected few, and I'm not referring to Northvolt, that can access a lot of capital, but it should be a broader ability to raise capital. And I think from our perspective, we're going to see more and more climate-driven technology coming to the markets, and I think there will be an appetite from investors to invest in them, not only retail but also institutional.
So the money will be skewed to that.
I think that's what we're seeing.
Yeah, no, I'm quite optimistic as well. I think the narrative that is very dangerous, because I fundamentally think it's wrong, is the one about sort of greenflation, that somehow, we're in an inflationary environment, and part of this is because these investments into net zero, which is sort of causing or worsening inflation. I think that is wrong. And particularly, you have to think about these things as technology. And I mean, I just did a piece on the exponential sort of fall of cost of solar panels, for example. And you start looking at these things. There was recently a paper from Oxford University where they modeled this, and which actually points to the complete opposite, with sort of energy becoming exponentially cheaper. So there's so many other narratives, and there's obviously a lot of people who have an interest in pushing a certain, things have changed now, and that means that the green transformation cannot happen. I think it is happening, and I think it will be probably the fundamental thing that's driving financial markets for the next couple of decades. It's probably that big and that necessary, and I think we need to hold on to that.
Annika, I think you maybe want to make a comment.
Yeah. I think the biggest risk for sustainability or the climate is that we end up in a crisis. So people and companies feel that they can't afford to pay for the right choose. Or again, the question about the electricity prices. We are well off compared to a lot of other peoples, but we still start to think about it's too expensive. And then we have been through the pandemic, the war, a lot of geopolitical risks, but we are still continuing with this work. And if you look at EU, for example, I'm impressed that they are doing what they are doing. They are not stepping back that much. I was worried that I would see much more of that. And they, of course, were taking small steps back now, burning some more fossil. But if you compare that with the risk not to help people and companies, that means that we will end up in companies that will not survive, people will get unemployed, and then they will start to take much bigger step backwards. And then it's tricky for us to come back. So I think it's a better choose to be a bit calm now and help people in the short run, and then come back and focus
some bridging to get over to
yeah. And then if you look at the companies, I think that's in the business model. That's the DNA. They can't. And when you're talking about the money investment, it's a big risk if you're not. When you sell what you're doing tomorrow, if you're not taking steps in that direction, and I'm representing a bank, we can't lend out money to companies who are not willing to take the right steps. It's too big risk. So I think it's important to think about it from that view. That's not the future. You can't be there. It's too much bad will.
And maybe, go ahead.
Yeah, and then we have to state what is the first to be sustainable. That's profit. And if profitability is threatened, which it is for many companies today, it is hard to do any other initiatives. So there will be a lot of cost cutting nowadays and for the upcoming years. And of course, that will have effect on different types of initiatives that you can't count on for the coming years or for the coming 12 or 24 months. So I think we will see a drop in the development when it comes to sustainability for the upcoming 12 months. But the market force is strong. There will be a big change, but there will be a slightly lower development during the upcoming.
Yeah, and it makes sense from a security perspective as well. It's harder for Putin to turn off the sun, right?
For sure. Adam, it seems like you wanted to make a final comment.
No, I think the concept of impact investing is not about immediate return in sort of percentage increase on what you have invested. It's the long-term impact of what you're investing. I think, to your point, that's where the banks are going with their finance. That's where institutions need to go. That's where pension money needs to go. And I think we have to have a long-term view. And that's the fascinating thing that we're seeing, that EU is being resilient here in investing. We're seeing banks aligning their strategies, companies future-proofing their businesses. So I think we're moving. Is it fast enough? Who knows? But I think the pendulum is moving.
But the momentum is continuing,
Yeah.
you're saying in this. Do we have, running out slightly of time, do we have anybody who wants to come in from the audience? I've missed. Here and here? Would you like to start? Yeah, we're starting over here.
Thank you. Roger Toft, PropTech Sweden. I just, when we come to real estate, the real estate market is standing for 40% of the emission. They have a big challenge right now when it comes to people doesn't want to go back to work, so they can't sign contracts in 10 years anymore. From Annika, from your point of view, when do you think the real estate market will get a hit properly? Because we see prices going down, and when will you stop lending out money and see that as a challenge with real estate assets?
Are you talking about the Swedish market now? Or?
Yes, in general, we can see it in Europe.
Yeah, it's tricky to compare because there are different rules and so on. But I think it's problematic as a lot of those companies have borrowed money from corporate bonds, and corporate bonds will not be there anymore. So they need to fund money somewhere else in the banks. And now that sector is so big, so we can't take it on the bank's balance sheets. It's too much. So some of them will really have problem. And I'm worried about what I see in the market in some perspective from that. Compare it with 2008. Actually. But I also know that there are a lot of companies in that sector that are smart. They have been there before. They have built their balance sheets. They're just sitting and waiting for someone will have problem and they can buy it. So I'm not that worried about the whole sector at the moment. I think it will be lots of turmoil. But I think some of them will not be there tomorrow and some will do really good business.
Thank you. We have one more over here, I think.
I have a question. The question is, what new surprises in the world economy? Countries are starting with digital currencies, right? Countries might want to promote consumption. What do you think could happen if digital currencies, started to have a shelf life? Your money is valid for this year. If you don't consume it, it's gone.
Okay, yeah, maybe something for the central bank experimentation.
Like
seems to be what these two want.
the voucher for H&M. It's an interesting one. I was thinking more about crypto overall, and that I think will be maybe a healthy rebalance on crypto in terms of more regulation. And I think crypto is not gone, but the stable coins. There's so many dimensions on this, but I don't know. Maybe it's a better question for you to answer.
If we look to cryptocurrency, I wouldn't call it currency because it hasn't been used as a currency. It has been used as a collector's item. And collector's items could have extreme prices, and they could drop by enormous number if people lose interest in them. So I wouldn't call them currency, and I'm sure I will get a lot of people getting angry.
That's the next panel.
Right now, but I'm willing to.
We can continue that over the drinks, actually, debate.
I believe in regulations. I think it's strange that it's not transparent at all, and we know there is a lot of monetary laundering and so on going on. So I think we will see regulation from other countries as well.
Thank you so much to the panel and for your engagement. Thank you.